Every few years, the world shifts in ways that most people don't notice until it's too late. Prices rise, currencies fluctuate, industries change direction, and what once felt safe begins to feel uncertain. As 2026 approaches, those shifts are already in motion. The global economy is adapting to higher living costs, evolving energy systems, and rapid advances in technology. What worked a decade ago, saving diligently, buying a home, and investing in familiar stocks, no longer guarantees financial security. Many people sense that change, but few are preparing for it. They keep working, spending, and hoping that things will balance out. But wealth doesn't protect itself. The choices you make now will determine how well you navigate the next decade. Here are the top assets you should consider securing before 2026, and why they matter. The first and most underrated asset to have is liquidity, access to cash when you need it. The past few years have shown how unpredictable the economy can be. Job markets can shift overnight. Emergencies can arise and opportunities can appear when least expected. Having a healthy emergency fund or cash reserve isn't a sign of fear. It's a sign of readiness. Too many people stay fully invested in long-term assets, but have no buffer for short-term surprises. When the unexpected happens, they're forced to sell valuable investments just to stay afloat. Cash gives you flexibility. It allows you to make choices from a place of control instead of desperation. Inflation might reduce its value over time, but a lack of liquidity can destroy your financial stability in an instant. Having access to at least 3 to 6 months of living expenses and savings is one of the most practical forms of financial security. Real estate remains a cornerstone of wealth, but the type of real estate that matters is changing. The era of speculative property buying is fading. People no longer need to live in major cities to earn a living, and remote work has reshaped where value lies. In the next few years, practical properties, rental units, affordable housing, agricultural land, and small multi-use buildings may outperform luxury estates or overpriced urban apartments. Real estate is also becoming more than just a roof over your head. It's an income-producing asset that protects against inflation and currency weakness. For many, owning land or property offers a psychological sense of stability that paper assets cannot. The key is buying for utility, not prestige. Properties that generate consistent cash flow or serve real needs will hold their worth long after speculative markets cool down. Equities ownership in businesses remain one of the most powerful long-term wealth builders, but the next few years will separate companies that merely benefited from hype from those creating genuine value. The years ahead will likely favor companies solving real problems: energy efficiency, artificial intelligence, digital infrastructure, food security, and healthcare innovation. The world is growing older, more digital, and more data-driven. Companies that serve those trends are likely to thrive. Yet, successful investing in equities isn't about chasing what's trending. It's about finding businesses that endure economic shocks, adapt quickly, and generate steady profits. Investors should think less like traders and more like partial owners, buying into companies they would feel comfortable holding for years, even through market volatility. The best investors understand that owning productive businesses is one of the few ways to grow wealth faster than inflation without depending on luck. Commodities are another category that deserves renewed attention before 2026. Over the last decade, low interest rates and easy money pushed investors toward technology and away from tangible assets. But as inflation and global uncertainty return, the value of real goods becomes clearer. Gold and silver remain traditional safe havens, not because they promise high returns, but because they represent stability when confidence in paper money wavers. Beyond precious metals, industrial materials like copper, lithium, and nickel are essential for modern energy and technology infrastructure. As electric vehicles, batteries, and renewable power expand, demand for these resources is set to grow. Commodities don't rely on corporate earnings or government promises. They're physical, finite, and globally traded. For everyday investors, this doesn't mean buying barrels of oil or mining equipment. It can mean holding small allocations in commodity funds or companies tied to the resource economy. One of the most overlooked but powerful assets is human capital. Your skills, knowledge, and adaptability. The next economic wave will reward those who can think, create, and learn faster than systems change. AI, automation, and globalization are rewriting job markets everywhere. The skill sets that paid well in 2015 may not even exist in 2030. Investing in yourself, whether through education, certifications, digital skills, or entrepreneurship, yields returns that compound for life. The difference between those who thrive in uncertainty and those who struggle often comes down to flexibility. Your ability to adapt to change is an asset that no market crash can take away. By 2026, industries like cybersecurity, green energy, data analytics, and creative problem-solving will be in high demand. Building competence in those areas can future-proof your earning power, giving you both income security and independence. Energy assets are becoming increasingly important as the world transitions toward sustainability. The push for renewable energy is no longer a political debate. It's an economic reality. Governments and corporations across the world are investing billions into solar, wind, and battery storage. Fossil fuels, while under pressure, still play a critical role in global production and transport. The shift toward renewable energy isn't about replacement, but coexistence. For investors, this creates a balanced opportunity. Traditional energy companies are diversifying, while clean energy firms continue to expand. Owning a mix of both can offer exposure to one of the biggest industrial shifts of this decade. Energy security will continue to shape economies, and those positioned early will benefit from both stability and growth. Digital assets are another space to watch, but they require caution. Cryptocurrencies went through hype cycles, yet the underlying blockchain technology continues to evolve. It's reshaping how value moves across borders and industries. For conservative investors, bonds are regaining importance. After years of low interest rates, higher yields have made them valuable again. Bonds provide income and stability, balancing portfolio risk when markets fluctuate. For those nearing retirement, they offer predictability and peace of mind, not excitement, but endurance. Owning a business, even a small one, remains one of the most effective ways to build wealth. A side business, digital product, or local venture provides income outside traditional employment and markets. Entrepreneurship is now more accessible than ever, and the ability to create value independently is a powerful hedge against uncertainty. Control, adaptability, and creativity are advantages no other asset provides. One of the more modern but powerful assets is data. Your personal and business information, and how you control it. Companies have built empires from understanding data, and individuals who know how to protect and leverage theirs gain real advantages. Privacy, digital awareness, and the ability to interpret information are becoming new forms of capital. As artificial intelligence evolves, the value of data and those who can manage it responsibly will continue to grow. For entrepreneurs and professionals alike, learning to use data ethically and effectively can open opportunities that didn't exist just a few years ago. When you step back, a pattern emerges. The most valuable assets before 2026 aren't just financial. They're a blend of tangible and intangible. Things you can measure and things you can't. Liquidity gives freedom. Real estate provides stability. Equities drive growth. Commodities protect against inflation. Energy powers progress. Digital assets represent the future of money. Bonds preserve income. The lesson is simple but powerful. Don't wait for the economy to tell you what to do. Build ownership now across different kinds of assets so that your future doesn't depend on a single outcome. The goal isn't to predict what will rise or fall by 2026. It's to hold value that survives every outcome. The people who understand this aren't chasing the next opportunity. They're preparing for it. Because wealth in its truest sense isn't about numbers on a screen. It's about ownership of assets, of knowledge, and of time. And as 2026 approaches, those who hold real, meaningful assets will be the ones ready not just to survive change, but to grow through